Good morning from our global headquarters in New York. I'm Menace Cranny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
Record rally holds. The Trump trade kicks into high gear as markets assess his return to the White House. Near a trifecta, Republicans close in on a red sweep with the House in play after gaining back the Senate. And a Fed set to cut 25 basis points as the path forward remains clouded by politics. Good morning, Manus.
Danny, a very good morning. It felt like a freight train of FOMO ripped through these markets yesterday. And as politics is going to be the alpha of these markets, if it is a red sweep, how much more of a roaring 20s narrative will you get in equities? We put in the Russell 2000. Hamas to yourself. Small caps ripped it away yesterday, up over 5%, ignoring the screams, I think, of, as they say, the bond vigilantes. Records after record. Post-election day, the biggest in history for the S&P 500, the 48th record this year. Roll it over and have a look at the screaming vigilantes. Or are they just the birds that are in charge at the moment? That's what we need to sort of disaggregate. This move in the bond market, it was a depth charge yesterday. You saw moves between 9 and 17 basis points across the curve. The 30-year auction had a pretty good bid to cover ratio on election day. 2.64 times cover to 2.37 previously. So there's some brave people out there buying long duration.
Well, for everyone that felt a sense of surprise, at least today will bring less of a surprise with the Fed set to cut 25 basis points. But if you're Fed Chair Powell, you'd probably say literally nothing, right? You deliver 25 basis points. They don't have to give a summary of economic projections. He's going to get asked question after question about politics. If I were him, I'd just, kind of shuffle my papers, say the prepared thing, and say, goodbye, folks, and get out of there.
We'll give you some reassessment at Christmas. And I think we're possibly going to know more about the complexion of who's in the Trump administration. And I think, Danny, that's going to be critically important. If it is a Lighthizer advisor, you've got some form to go on in terms of what the tariff narrative might be, and that tariff narrative has a very, very direct potential consequence on inflation here.
Well, to be fair, a lot of his advisors, from Scott Bessent to Peter Navarro, have said, look, this is something that will be phased in, and we're going to give countries a chance to respond and open up their markets. So you might not get the worst of what's feared with tariffs, just given some of the language you're hearing from advisors.
Yeah, I think we've gone from shock and awe. Trump 1. Let's see whether it's reconciliation and negotiation. Trump 2. That is all to play for. But we have the Vice President, Kamala Harris, delivering her concession speech on Wednesday afternoon from Howard University. Here's what she told her supporters.
The outcome of this election is not what we wanted, not what we fought for, not what we voted for, but hear me when I say, the light of America's promise will always burn bright. As long as we never give up, and as long as we keep fighting.
Strong concession speech there from the Vice President. Derek Wallbank joins us now to assess the landscape of politics. Derek, it looks like, as we said in the headlines, a trifecta, potentially a red sweep for the Republicans. And the question is then, what is unchecked Trump 2? What is ground zero? Is it on the tax and the fiscal if it is a red sweep?
Well, Manus, look, there are a couple of things that Donald Trump can do without having to worry too much about Congress, right? Tariffs are one of those things. He has a favorable Senate right now, so one would assume that he will be able to put into office the sort of people he wants to put into office. Now, taxes are one of those things that you can get through in Congress if you really try without having to worry too much about a filibuster. There's a process called budget reconciliation. I'll spare you the details, but the end point is that you may not need to find 60 votes for it. That could be really important for Donald Trump. And indeed, we are staring at a possible tax cliff on the personal side. Trump has made an awful lot of promises about things that he wants to do on the tax side, how he could get most of those, all of those, some of those through. I think that's going to be a really big question. You mentioned the tariff part. That was a signature part of Donald Trump's first administration, right? And so that's going to be one of the things that I think is immediately in play. The other thing that I think that's going to be in play a little bit, and you mentioned it talking about Jay Powell, is to what sense does the administrative state of the United States allow Trump to do what he wants to do? Certainly one of the reporting notes that has been made in the campaign coming up is that there will be far fewer people around Donald Trump trying to constrain him. And as I recall, going back into the tariff fights and the first trade war, if we were to have another one again, is that the Fed tried its level best during that time to minimize the impacts of that. They did brook some criticism about that to say that maybe that focus on the short term was actually encouraging to Trump because it minimized some of the damage. But we did see a Fed that was trying to make sure that if that was the path that the president went down, that it wasn't quite as damaging to the economy.
Well, we also remember in the first Trump presidency, you had people like Gary Cohn who had resigned, disagreeing with certain things like tariffs, for example. Derek, what do we understand about how the team around Trump might take form and what that means about his policy going forward?
Yeah, you've got a couple of people that I think are worth thinking about here, and the two people that your mind most goes to is Linda McMahon, the WWE former co-founder. That's at a different company now, but Linda McMahon is one. She was in Trump's administration the first time. Cantor Fitzgerald's Howard Lutnick is also helping lead that transition. We're looking at possibly John Paulson is one of the names that's been mentioned around the Treasury Secretary role. Marco Rubio is one of the people. Rick Grinnell is another who have been mentioned around the state role. Scott Bessent, you saw his name on the screen, was one of the people floated around maybe for Treasury. That's all going to get figured out in the coming, let's say, days to weeks. Lutnick and McMahon are going to play a very huge role in figuring that out. But I think some of those big name positions are going to be places where Trump is going to want to put people who have a certain amount of gravitas in the subjects that they cover. At the same time, there are a lot of people who I would describe as maybe ride or die Trump folks who are also looking for roles in his administration. And so one of the really critical questions is going to be, to what degree do they get positions? What sort of influence do they get? And remember, this is the difference between having a Republican Senate and a Democratic Senate, and maybe between having a lightly Republican Senate and a big one, is that you can get through the people that you want. Right. And so some of those constraints on Trump getting who he wants may not actually be there this time.
Yeah, a really good point. Derek, thank you so much. That is Bloomberg's Derek Wallbank. Now, the epicenter of the market reaction, just in terms of volatility, take a look at the past 2 days for dollar MEX. The peso sells off hard, significantly, when it seems like Trump is going to be the president. And indeed, you get that. The president-elect Donald Trump, and the peso at one point weaker by 2.5% versus the dollar. And then something changes. Over the past 2 days, the peso actually stronger versus the dollar. Joining us now is Jane Foley, head of FX strategy at Rabobank. Jane, this has been seen as a plain and simple tariff trade, and then something happened yesterday. What do you make of it?
Well, of course, we all know that over the last few years, Mexico has become the US's largest trading partner. And then, of course, there have been, as these different trading groups are developed. So you have the China trading group and the US and its allies trading group. We all know that there are countries such as Mexico and Vietnam who've actually been benefiting from that. There's been a lot of whispers, a lot of anecdotal evidence that there's been a lot of Chinese FDI into Mexico, whereas Chinese producers try and export into the US through the back door. And there's been speculation for a long time that both Harris and Trump would try and push back against that. Now, this is what the Mexican peso has been reacting to. Fears, of course, that there would be a big pushback against particularly Chinese FDI and Chinese companies producing in Mexico. But more generally, we saw Trump threaten John Deere against moving some of their manufacturing facilities into Mexico. He wants manufacturing to stay at home in the US. So the Mexican peso was trying to find its sort of natural place. How worried? Should it be about the potential for tariffs? Or actually, can it carry on making good and making the most of the fact that it is one of these sort of transition currencies that's been sort of avoiding this tension between the US and China?
Well, maybe that relief came in that, obviously, if there's growth in America, maybe it has some stability effect. The President, Sheinbaum, calling for calm and, of course, releasing photographs of herself and Larry Fink. Let's go to the yuan, because it made the lows of 2023. I mean, ground zero for tariffs and political angst is peso and the yuan. I look at what the Chinese did today, the weakest. They went with a clearing, a fixing today, which was the weakest since 2023. I get the sense they're front-loading themselves and moving on this yuan, but that has political issues. It could really irk Trump if they depreciate too much.
Well, certainly, and we know politically that the Chinese authorities, they don't want to have a significantly weaker Chinese renminbi, so that there is that from the politics. But of course, the economics would potentially call for a softer renminbi, given the economic backdrop in China. Now, we did see export data from China being pretty strong, and that is, of course, the assumption that lots of companies were sort of front-loading their exports ahead of the potential from tariffs from the US. So we are going to see some messy data from China because of the political situation, and certainly we are likely to see more stimulus. And we have had indications from China that if Trump were to win the US presidency, that stimulus could be greater, because, of course, they are, of course, concerned about the impact on China from these tariffs. But of course, China right now is coming from a very weak base. We know about the property sector, we know about these huge debts, we know about the weakness of consumption, for instance, and we know that FDI has been affected in recent years into China. So it's from a weak base, and I would imagine, that a lot of investors are going to be very wary about China at this point. So I think there's a lot to be concerned about for China, and of course, therefore, for the renminbi.
It's a great example, Jane, of elections have consequences, and the consequences have been far-reaching in FX. We've already talked about dollar mex and the yuan. The euro really also under pressure yesterday, the dollar having its strongest gain against the euro since 2016. Immediately yesterday, Jane, you had Goldman Sachs come out and cut their 2025 forecast for the Eurozone from 1.1% to 0.8%. Do you also expect weaker growth from Europe, maybe more rate cuts, maybe something that looks more like dollar parity with the euro?
I've been talking with our clients that parity is a realistic option. It's not in our forecast table right now, but it is realistic, and I do have a lot of sympathy with that view. And we've got to remember here, there's two separate branches of facts here. We've got the stronger growth projections potentially under Trump, the more inflationary outlook, and the possibility of less interest rate cuts from the Fed, which of course is dollar supportive, at least through 2025. And then we've got the Eurozone fundamentals as well. We've had now the bad news about the German coalition government collapsing. That, of course, adds to the weight of these stagnationary conditions that Germany's been suffering for some time. And of course, over the last month or so, we've had change in the ECB, more focus on growth, because there's more confidence within the policymakers that inflation is potentially back in its box, or at least it could be in the middle of next year. Now, I think that potentially exposes the euro a lot more to these weak fundamentals of Germany, the weak fundamentals of France as well, given its budget outlook. And so we have these two stories. We've got the independent story of Trump and maybe dollar strength coming from those pro-growth fundamentals in the US. And then we've got a Eurozone more focused on the weak growth story, and therefore the market taking more account of weak German fundamentals.
Jane, we've got through this entire interview without talking about the Fed. Very quickly, as quickly as you can, 25 today, and then a pause. And I just wonder, what level of FOMO do you have in the dollar? Is that ultimately what drives us forward here? A pause from the Fed and a red sweep?
Well, we think that there's every reason to worry that the Fed's easing cycle could all be over by January if we get a red sweep. And that, of course, is going to be supportive for the dollar.
Jane, succinct. Perfect. Thank you very much. Jane Foley there at Rabobank. There are other stories trending on your Bloomberg terminal this morning. Let's get you through some of them. The German Chancellor, Olaf Scholz, calls for a confidence vote and a snap election. The move comes after his surprise dismissal of the finance minister, Christian Lindner. Scholz's coalition collapsed over plans on how to revive the economy. Opposition leaders are calling for a confidence vote as soon as next week.
And the German president says that he's prepared to dissolve parliament if requested. Also in Germany, people familiar say activist investor Elliott has built a sizable stake in RWE. Elliott has already called on the German utilities giant to consider a share buyback. Elliott declined to comment on whether it has any holdings and has denied that it is engaging with anyone at RWE in relation to an investment in the company.
And growth in China's exports jumps to a 2-year high. Exports rose more than 12% from a year earlier. The surge is partly driven by exporters trying to front-load the shipments ahead of the holidays and the looming higher tariffs.
Coming up, Qualcomm rises, ARM falls. We're going to look at how the smartphone industry is making an uneven comeback.
A little bit later this hour, we'll discuss the upcoming Fed decision with Steve Ricchiuto of Mizuho Securities right here on Bloomberg Brief. Good morning. Bloomberg Brief. I'm Manus Cranny alongside Danny Berger here in New York. What have we got? A bit of a wobbly comeback?
Yeah, wobbly comeback, a great way to describe it in the smartphone industry. Because you had Qualcomm, you can see shares there, pre-market up 8.5%. They had a rosy sales forecast, but ARM down 6%, gave a tepid outlook. Joining us now is Bloomberg Daybreak Europe anchor and our tech expert, Tom McKenzie. Let's start with Qualcomm. Tom, I mean, good signs for this smartphone market coming back.
Yeah, look, both these companies are bellwethers, aren't they? And both, in fact, beat in terms of the most recent quarter, in terms of the earnings. But it was the forecast going forward where there was that divergence. And on Qualcomm, they gave that more upbeat forecast, certainly than ARM did, and that was the expectation, or at least that was a reaction from investors. You're seeing that pre-market, of course. They expect, in fact, revenues to come in above the range than estimates had expected for the current quarter. So they're looking, Qualcomm, at revenue in the current quarter coming in above $11 billion. Estimates had been for around $10.5 billion, so that was positive. They have big exposure, of course, to the Chinese market, and they've seen a big tick up, interestingly, in terms of sales to Android devices. They supply some of the most popular smartphones in that market, and they saw that segment, Android phones, increasing 40% in the fiscal year. They're also making some success in terms of supplying chips into the auto sector as well. That was another number that jumped out for Qualcomm in terms of the demand and the sell into the auto sector. That jumped 70%. So they're trying to get a more divergent play here into devices, into the auto sector, as well as into smartphones, where they still get about 60% of their revenues. So they beat in the first quarter, or at least in the most recent quarter, and their forecast for the current quarter came in better than expected for Qualcomm. Again, a gauge in terms of that demand for smartphones, particularly at the high end. So it does seem to be modestly starting to pick up.
We only trade in the high end on this show, Tom. Only on the high end. Rene Haas, the language that he's using over at ARM. We're not trying to get too far ahead of our skis. It's a great line because it tempers the expectation about the diversification trade within ARM, doesn't it? From the traditional phone chips to those higher quality, let's say higher yielding data center product.
That is exactly what it comes down to, Manus, because they are too exposed. He knows this. Rene Haas knows they're too exposed to the smartphone market, and they are trying, and he's been driving hard at trying to diversify in terms of their customers, particularly when it comes to data centers, particularly around building out solutions for their customers that are more well-rounded, meaning they'll get more from licenses rather than royalties that tend to be slightly lower profit margin. Again, the current quarter, the most recent quarter, I should say, they beat ARM, but it's looking forward to the current quarter where the expectations didn't meet the estimates for this company. The AI play is there for them. They want to be there on the edge, so in terms of those smartphone devices, but also, of course, in terms of the data centers. And Rene Haas basically saying, look, this will take time. We are that essential component within the AI play, but it is going to take time. They maintained their forecast, by the way, for the current year. Annual forecast, they see sales of up to $4.1 billion for ARM.
Okay, well, they're taking a little bit of a chunk out of them this morning, down over 5%. Tom, thank you very much. Tom McKenzie on the tech trail. Coming up in the show, what else is making headlines around the world? We're really beginning to assess Politics Day 2, but also a $50 million bet on Donald Trump. Who won? This is Bloomberg.
It's your Bloomberg Brief. Danny Berger and Manish Cranny here in New York. Let's get you some front page news. A look at what's making headlines around the world. First up, the Washington Post has this. The president-elect's team already eyeing some of the top contenders for appointments. You have Senator Marco Rubio and former acting director of the National Intelligence Richard Grenell are under consideration for Secretary of State. Senator Tom Cotton, he has been floated as the defense secretary. Vivek Ramaswamy and North Dakota Governor Doug Burgum are also expected to join the cabinet. Manis, that's all according to Post.
Yeah, these markets are going to really hunker down on who takes these posts. New York Times, this is what we've got. Robert F. Kennedy Jr., foe of the drug makers and the regulators. He's poised to wield power, new power. President-elect Donald Trump has encouraged him to go wild on health. The former Surgeon General under Trump's first administration warned that RFK's influence may discourage people from vaccines. Now, it isn't clear exactly what the role RFK will play.
Yeah, he certainly wants to slash a lot of things. Finally,
yes,
this on the Wall Street Journal. The mystery whale, the Trump whale, who is in Polymarket, has made $50 million. He's just known as Theo. We know that he is French, but again, yeah, $50 million. He also bet that he'd win the popular vote. We don't know the outcome of that yet. The reason he won, I think, is really interesting. He basically said the neighbor method, basically polls that said, what do you think your neighbor will vote for, skewed more towards Trump. And he said, hey, I think that's more telling. But again, this guy's an upholsterer. He's just like a finance guy in France.
Well, he's going to be a very rich finance guy, and he can sort of go sur la plage.
Maybe now a retired finance guy.
On the Côte d'Azur. The billionaires of the world did well yesterday. $64 billion for the world's richest people. And guess who made the most yesterday? $26 billion. Elon Musk. There you go. Relationships matter, Danny.
These are the people who are probably equally happy as Trump that Trump won. From our global headquarters in New York, welcome to Bloomberg Brief. Danny Berger and Manish Cranny. Let's set your agenda.
The record rally holds. The Trump trade kicks into high gear as markets assess Trump's return to the White House. A near trifecta. Republicans close in on a red sweep with the House in play after gaining back the Senate. And the Fed is set to cut 25 basis points as the path forward remains clouded by politics. Danny, good morning.
Good morning. Well, all that happened in the past 48 hours. A seismic event with implications throughout assets. 48th record high for the S&P 500. Small caps have their best performance since November of 2022. The KBW Bank Index had its best day since November 2020 when the Pfizer vaccine was announced. We continue gains this morning, though more tepid than where we were at this point yesterday. Meanwhile, for the bond market, again, some of the losses relax. Where your 10-year yield yesterday, that rose 16 basis points. 30-year yield goes 17 basis points. The dollar had its strongest gain against the euro since 2016. Again, it's a little bit weaker this morning, the dollar that is. And Bitcoin, Manis, that closed at an all-time high.
I mean, there's a fury to some of these trades, but there was a rational. I mean, if you go back 24 hours, we had Mohamed El-Arian on surveillance, and he said there's a rationality to these markets. They are behaving in a rational way, not a rational exuberance. It is perfectly rational. You have exceptionalism, and to that end, then you need to disaggregate between roaring 20s, or is it just a temporary melt up until we see some of the size and shape of the policies?
I have to say, I'm surprised how orderly it was to see yields go up 20 basis points and risk assets just absorb it. They were fine. It was a rally in everything to the point where even the peso ended the day stronger. I think that's extremely telling.
And then this gives you some perspective. It's a growth narrative, perhaps, rather than an inflation narrative that is the alpha at the moment. I know that this can all change because the screaming bond vigilantes did nothing to wound, you know, this sort of the salad-eating equity traders.
Well, we'll see if a red sweep changes that. In the meantime, we have some central bank decisions to get through. We have the Fed, and we also have the Bank of England. Now, when it comes to the Bank of England, they're widely expected to cut rates by a quarter point today. Sound familiar? Fed's expected to do the same. But the release of the UK's budget last week and Trump's victory, all of that casting new uncertainty over future policy. Joining us now is Bloomberg UK correspondent Lizzie Burden outside of Threadneedle Street. Lizzie, set the scene for us. What do we expect today?
Well, as you say, that quarter point cut pretty baked in, given that inflation's back below the BOE's 2% target. So the focus on the path ahead. Rachel Reeves, the Chancellor, throwing a spanner in the works with the budget because it was the biggest fiscal loosening in decades. So traders paired their bets off the back on BOE cuts. But then you had Trump's victory, and you can debate what the economic impact will be, but very simplistically, if there are tariffs, that could stunt European growth. But if there's a fiscal response, that could be inflationary. It'll be interesting to see how Andrew Bailey weighs these factors. He was dropping all of these hints about more aggressive policy to come, but that was under the cover of the 50 basis point cut from the Federal Reserve. And it clashes with his chief economist, Hugh Pill, who's been more cautious. So we'll listen to Bailey and we'll look at the updated forecasts. Do they upgrade the view on inflation and growth post-budget? It's too soon to be factoring in the US election, but even then this will be based on a pre-UK budget yield curve. And you remember the gilt market reaction to Rachel Reeves's announcements, and in fact because of the increased borrowing costs, the headroom she left herself has been wiped out already. So at this point it looks inevitable there'll be more tax rises. We'll listen to all of that. At the moment markets are pricing a 1 in 4 chance of a December rate cut, fully pricing 3 cuts next year. Let's see how that changes. I reckon the tone today will be all about the uncertainty.
OK, Lizzie, thank you very much. We'll count down to that announcement. Lizzie Bowden there outside the Bank of England. Right here in the United States, the Fed is expected to continue its rate-cutting cycle when it announces its decision at 2 p.m. Now, it's expected to cut by 25 basis points. Rachel Evans joins us now. Apparently, this is the easiest job in the world, according to the president-elect. You turn up once a month and you just flick the old coin. Rachel, it's almost a shoe-in for 25 basis points. Powell just wants to get off and out the door without any injury about commentary of what next year might look like.
Yeah, I think that's going to be the big challenge for him, as he is undoubtedly going to get pressed in questions, not just about the state of the economy, but just about how he feels about working in an environment where Donald Trump is president once again. So obviously, as you mentioned, we're going to see that 25 basis point cut almost a lock, but there's going to be a lot of discussion about what the path of interest rates looks like once Trump takes the reins. There's been discussion in markets about whether his policies are likely to be very inflationary, just given kind of the outlook for tariffs and also for tax cuts. So we're likely to see some questions about whether that could push up CPI and how that would influence potentially keeping interest rates higher for longer. There's also potentially going to be some queries around the latest jobs figures. We did see a non-farm payrolls report for last month coming back very, very weak, largely as a result, of course, of those strikes and hurricanes. But there's going to be some questions to answer about whether that suggests any sort of more systemic weaknesses emerging in the labour market that might require the Fed to move more quickly with rate cuts. So it's going to be interesting to see how he kind of sort of deals with that footwork he's going to need to kind of balance between sort of the outlook for the economy at the moment, just given sort of that backdrop, and then the outlook under that Trump presidency.
Rachel, thank you very much. Setting the scene there, Rachel Evans for the Fed. Our guest this morning is Steve Ricchiuto, Chief Economist at Mizuho Securities. Steve, good morning. Welcome to the show. Get any sleep at all in the past 24 hours?
Last 24 hours, yes. Prior to that, no.
I think I heard your alarm go off to wake up about 10 minutes ago.
I did. I unfortunately just made that mistake. I apologize.
Not at all. It's good to know that other people have a normal life and they're waking up just as Danny and I are doing the 5:30 headlines. Now, look, there's a freight train has been driven through risk. You can decide whether that's FOMO or embracing US exceptionalism. And we were just chatting in the break. How does this evolve from here? Does this evolve because of policy? And is there any guardrail on policy that Trump and this administration can administer? Because the one thing, as you say, that came through was, yes, the economy was top of the agenda, but it was gas and groceries that were the killer for the Democrats.
Yeah, I think the real message out of this election is if you're trying to craft an economic policy that addresses the concerns of the American population, which clearly throughout one administration has taken in a totally different administration, is you got to look at what was the real root cause. It wasn't an economy running below trend. This economy is running well above trend. It's not a weak labor market. This economy is running at full employment. This has an economy that has a Federal Reserve that wants to support full employment. It really was an economy that was addressing the overall hike in prices and the reduction that's had on real discretionary disposable income of households. And how do you address that? And the answer is you either address it by pulling back demand or you address it by increasing supply. The concerns I have is most of the proposals that were advanced on both sides during this campaign were demand-driven, not supply-driven. How do you address the supply considerations? That's an important development. And to be honest with you, the Reagan-esque supply-side related tax cuts, I mean, we could argue that to death whether that really worked or not. It's not definitive whether it actually worked in that direction. There was an excess supply situation that exists in the world today, and it's a function of very different factors. And I think that's the one thing that they really should rely on, which is allow this economy to do its work itself rather than trying to correct it for it.
It's probably not what we're going to get, though, considering what we've heard from Trump. And tariffs is a great example of policy that many have pointed to, saying this is inflationary at a time when the top issue, to your point, are prices. You made a really good point during the break, though, that in 2016, the tariff policy wasn't necessarily that, and producers were happy to eat some of those margins. Will this time be different?
Well, I'm not so sure it will be. That's one of the key things. I think people are totally ignoring that factor. Back in 2016, you had a much stronger Chinese economy, you had a much stronger European economy. When you look at where we are today, it's a much weaker global economic backdrop. In particular, it's a much more hollowed out China. It's a diversified supply chain. We've actually created more excess supply of tradable goods. So there's a greater potential for some of this to be eaten up in terms of margins. The other thing is, let's understand, I don't think he's going to come in on day one and try to, use all these tariffs effectively. I think he's going to use them as a negotiating tool to try to get what he wants. In particular in Europe, I think he wants Europe to shoulder more of the cost of the situation in Ukraine. Again, that's something that can be done, and can it stave off some of these adjustments? Earlier, there was a conversation about what's going on between Chinese manufacturers moving into Mexico and the impacts that could have. So there are things that can be done, in particular Mexico closing off its southern border so we don't have all the pressure at the United States southern border. The Mexico southern border is a lot smaller than our southern border. So there are things that can be done to avoid these taxes, and that is tariffs, and I think that's the negotiating play.
And maybe he has to use some negotiation with Congress when it comes to getting his tax extensions through as well. It just depends whether he takes a hold of that. Can we just reflect for a moment? We've got Fed coming down today. 25 basis points is the assumption. It's really what happens after this with projections and tariffs. But if I look back at 2016, it's not 2016. We've got higher interest rates. We had a global manufacturing recession then. And there's not as much capacity in this economy to really take any more alpha. So are we already in a policy error? Should this economy just, in your words, allowed to do its own thing now without the Fed? Should the Fed go into a pause mode after December?
Yeah, we were never an advocate of the Federal Reserve having to cut rates as aggressively as everyone else. Our view has always been that the neutral Fed funds rate is 4%, not 3%. There's 100 basis points difference right there, number one. And number two, we've been sitting there saying, you've got an economy that's running above trend. Why do we think this economy doesn't need this level of interest rates? So we do believe there will be a much slower pace of rate reductions than the market has anticipated. And we think the terminal rate that we'll get to at max will be 4%. And we're not so sure we ever get there. We might wind up cutting this rate reduction cycle off much shorter than happened. This is exactly what happened to Greenspan in his, mid-1990s soft landing scenario. It was a series of small rate cuts followed up by a couple of increases, followed up by a couple of cuts. It's fine-tuning around the margin, and I think, this Fed has to wake up to the roses as well, that they've got an economy that is running at full employment. You're targeting full employment. Well, you're there. What are you trying to do?
But in the vein of elections have consequences, all these conversations, though, now need to be colored by the politics of it, which I'm sure you're thrilled about, Steve. If you have Trump, who does try to replace Powell, with someone who's willing to do his bidding, that in the face of higher spending, tax cuts, continues to cut rates, is this something that the market will push back again? Does this have a check if Trump tries to do something like that?
Well, I think we have to understand the nature of the Federal Reserve can lay out the situation where the chairman doesn't have as much power as we think. That's number one. Number two, you look at the FOMC minutes that came out last time. There was clearly a lot more dissension in that meeting than came out in the post-meeting press conference. So clearly this was a Powell decision to move towards 50 basis points. And again, to some extent, it's his mess. He has to clean it up. And I think that's one of the key things. The bond market hasn't liked it from day one. And most of the deterioration prior to yesterday was not the Trump trade. It was monetary policy decisions. So I think the chairman faces more internal resistance than people think. And I think, now you're going to have a situation where that may come to the forefront more quickly.
Can I ask you, a lot has been written about screaming bond vigilantes. I look at this bond market, at 442. This is not vigilantism. This is just simply the bears gripping a hold of this market, because I traded in 1994 and 1995, and I understand what vigilantism is. I think this is bears, not vigilantes. If the vigilantes really grip into this, where does it take us?
The question is, are there any vigilantes left in the bond market? That's the key question. And the answer is everybody's an indexer. Yeah. And, you know, their tolerance for moving the duration of their portfolio around that index is very small. So you don't have the people in the space that you had before. The other thing is most of the people that are in these spaces that are trading hedge funds are really looking at other areas of the economy and the markets. They're looking at structured credit. They're looking at corporate bonds. They're looking at private equity.
So much more
They're looking other places, and the Treasury bond market could simply become an area where maybe I'll lose a little bit here to hold down the yields because I'm making more over here on this trade.
Such an interesting point.
So
Steve.
it's the dynamic of the market has changed dramatically, and that's why I'm not so sure there really are bond vigilantes anymore.
Well, to be fair, the bond market literally only just got interesting. Post-GFC, it was so boring. Who's left in there that's willing to trade around?
Not a lot.
Not a lot.
The street has very little risk capital.
Yeah.
Steve's here and I'm here.
At least we have that. Steve, so wonderful to see you. We know you have a flight you need to go catch, so we're going to let you go. Steve Ricchiuto of Mizuho. This is Bloomberg. Welcome back to your Bloomberg Brief. Danny Berger and Manus Cranny here in New York. Manus, signs of a wobbly comeback in the smartphone industry.
What a great word. It did have us tickled in the break there. A wobbly comeback, a very British phrase for the smartphone industry. Qualcomm reporting rosy results and forecasts. While the chip designer over at ARM, that gave a slightly more tepid outlook. For the very latest, let's get to Daybreak Europe anchor Tom McKenzie. So differentiating between the two here, let's go with Qualcomm first of all. I mean, where was the restraint in that story? Tom?
Yeah, look, a lot of this is about expectations from investors' perspective. This is a stock that's up about 20% year to date versus ARM, which is up about 90% year to date. On Qualcomm, they beat in the last quarter, but also, importantly for the current quarter, they projected a forecast in terms of sales pretty significantly above expectations. Expectations had been for $10.5 billion. They're now looking at $11.3 billion. It's the high-end devices, it's the high-end smartphones, so Manus's iPhone 16 Pro that is powering this. They're also seeing an uptick in terms of Android devices in the Chinese market, so that's helping them. And interestingly, an uptick of 70% in terms of their auto segment they're pushing into as well. So it was on those factors that Qualcomm came out with this beat, but interestingly and importantly as well for investors, it was the forecast coming in above in terms of their expectations, and they're not as reliant on the smartphone market as they once were.
Is that the problem with ARM, Tom, that it just is too reliant on the smartphone market?
The problem with ARM, I think, is expectations again. Expectations from investors. This is a pure play AI story when it is not. Rene Haas and the team are, of course, working very hard to ensure they have proper exposure to the data center story and the edge AI computing story. But that will take time, and they still are getting the vast majority of their revenues from a smartphone market that you can describe as wobbly or at least imperfect at this point in terms of the turnaround there. So I think it's an expectation story. Worth noting as well, $15 billion of buyback coming through from Qualcomm. No buyback announced from ARM. But again, they did hold to their forecast for the year. Analysts saying the story longer term, our team at Bloomberg Intelligence remains in terms of the AI thesis for ARM. May take some time.
Well, no wobbles from Tom McKenzie. Always a joy to have you on. Tom, thank you so much. Okay, let's turn to U.S. politics now. Vice President Kamala Harris delivered her concession speech yesterday afternoon from Howard University. Here's what she told her supporters.
The outcome of this election is not what we wanted, not what we fought for, not what we voted for, but hear me when I say, the light of America's promise will always burn bright. As long as we never give up, and as long as we keep fighting.
Joining us now is Bloomberg government reporter Jack Fitzpatrick. Jack, we got the results for the White House and the Senate a lot quicker, specifically the White House, than most people had thought. The House is still to play for. Where is the math stacking up to right now?
It's leaning Republicans' way. Depending on which calls you track, they're still shy of a majority. But if they pick up 10 or a little more than 10 more races, then Republicans will take the House. Democrats have been open at this point about acknowledging they have a much narrower path to winning the House, but it still is a little too early to call. It also raises the question, though, what will the margin look like? If Republicans do win the House and they're just barely over the majority, that makes it very, very difficult to push a legislative agenda through. They'll be talking about what they can do in terms of major Republican legislation through the budget process that doesn't get hitched up by the filibuster in the Senate. But if they've got an extremely narrow margin in the House and maybe only 52 or maybe 53 in the Senate, there will be significant challenges for Republicans.
So this is a building story about maybe a little bit more restraint on the execution of tariffs, and as you say, maybe some mini guardrails on the fiscal side. Talk us through the transition to picking the cabinet. We've got lots of notes in our inbox in terms of who might be on that list for Treasury Secretary, from John Paulson, Scott Bessent, and I'm even seeing from one or two houses, Robert Lighthizer coming back, maybe as Treasury, maybe even as Trade. So it's going to be an interesting mix of advisors.
Yeah, they're early in the stages of discussing potential cabinet picks. And again, as I mentioned, while we watch the margins, the more seats, the couple last ones uncalled in the Senate, if Republicans can build up a better than 52-seat majority, it gets easier to get Trump's picks through. There are some high-profile names that you've heard, aside from the Treasury picks, that are still undecided where they'd go. Obviously, RFK Jr., some sort of health role, whether that's HHS or in the White House. Elon Musk's relationship to the Trump campaign has been relevant, but we don't know how formal that will be. There may be some members of Congress who go to the Trump administration that then creates a challenge for Republican leadership if they have those narrow margins. Someone like Marco Rubio may be someone to watch. I'd also throw out, whether it's a cabinet pick or otherwise, Russ Vought, who was the OMB director in the Trump administration last time, is someone to watch, who's tried to kind of institutionalize Trump's politics and philosophy, sort of a background player to watch, certainly.
Okay. Names in the frame. They're all making pilgrimages to Mar-a-Lago at the moment. Jack, thank you very much. Our government reporter, Jack Fitzpatrick. Coming up, it is central bank decision day around the world and a Treasury auction, just to keep you on your toes, right here on Bloomberg.
Let's get you set up for your trading day. We have a Bank of England announcement that comes, their rate decision at 7 a.m. Eastern. Then we're going to get jobless claims, that data to come at 8:30 a.m. And then it's the Fed announcing its decision at 2 p.m., along with a news conference from Chair Powell at 2:30 p.m., where I guess, Manus, he's going to say nothing.
He's probably hoping to get away with saying nothing controversial. Keep your eye on Qualcomm. We did this with Tom a little bit earlier. I'll just leave you the price check on that. Rising, you've got phone demand boosting its forecast, and ARM is falling, obviously, on the other side of that trade. Still recovering in the smartphone market. Danny, we just got to finish off with, it is day two. We're pausing for breath. I think the Mexican peso, we started the show with it, you did. It sort of says it all. Collapsed yesterday, dollar alpha, and undid all of it in the space of 24 hours.
It shows the euphoria of growth that's taking over, that even the peso is pricing in more robust growth. Okay, that's it for us. Surveillance ahead.